Hello everyone, this is Professor Xun Bian. In this video tutorial, I'm going to talk to you about how to calculate the net present value using the TIBA2 plus financial calculator. So the question that we're going to work through for this video tutorial is this one here. With a discount rate of 5%, we want to calculate the NPV of the following cash flow. And specifically here, we have three cash flows. At the time zero, you're making the investment, and the investment is costing you $10,000. This is typically what we refer to as the cost of investment. And then this investment is going to generate three future cash flows for you in the future. At time one, this is going to generate $5,000. And it's going to generate another $5,000 at time two. And then when it gets to time three, it's going to generate a $7,000. So what we want to do here is to use the financial calculator to calculate the net present value. Basically, net present value is simply the present value of the future cash flow minus the cost of investment. You can do that pretty conveniently using the TIBA2 plus or the TIBA2 plus professional financial calculator. To do that, again, I'm going to walk you over the key entries that we have here. Number one, you want to clear the memory, as you always have to do for any kind of calculator, calculation that we want to do. You want to do second, reset, and enter. And then what you want to do is you want to access what we call the cash flow worksheet. You can do that by pressing the CF button on your calculator, right? This is kind of like your entrance into the cash flow worksheet. And then after you get into the cash flow worksheet, you just have to one by one enter the cash flow that's given to us. So the first thing that you have to enter here is the initial cash flow, right? This is basically referring to the cash flow happening at time zero, which in this case is the $10,000 investment cost that you incur at time zero. So you here notice that I am entering this number as a negative number because this is cash going out. This is the investment that I'm making. So 10,000 negative, you simply enter that. And then you press, there's a downward arrow key. All right, I will show you, everything with my calculator in a minute, but there is a downward arrow key that you press, right? This is going to allow you to go to the next cash flow, which is your first future cash flow. In this case, the first future cash flow is $5,000. You enter 5,000, enter, then go down. But notice here, we have at time one a $5,000, at time two another $5,000 to capture both of those $5,000 because those two cash flows actually happens consecutively and they're in the same amount. We don't have to enter them separately. Although if you want to enter them separately, you can do 5,000 with a frequency of 1, 5,000 with a frequency of 1. But in this case, if they are the same and they also happen consecutively, what you can do is you can actually use one entry to capture both of those cash flows. So my way of thinking about, what you do here is you enter your first unique future cash flow, and here I enter 5,000, and I can go ahead and set the frequency to be 2, right? 5,000 with a frequency of 2. That actually captures both of those cash flows. And then you go to the next one, you got $7,000, you enter that. In this case, you have a frequency of 1, right? And then what do? Is you're ready now to calculate the NPV. You press the NPV button, right? And then the calculator is going to say, not so quick. You still have to tell me basically what, the discount rate is. So you enter 5 as the discount rate. You enter that, and then you hit CPT, and that's going to allow you to calculate the net present value of the cash flow, right? So I just walked you over the key entries that you use to calculate, but this time let me bring in my calculator so you can see how those things actually, go into your calculator. All right, so let me get my calculator here, right? So what do you want to do? First of all, is to do second, reset, and enter, right? That clears out the memory, and then now you're ready to do this new calculation here. And then as you can see here on the second row of your calculator, that's what I call the CF button. That's what I call the entrance to your, cash flow worksheet. You hit that. right? Immediately you see on your screen, you should see CF0. This is, like I said, this is what I call your initial cash flow. You enter whatever cash flow happens at time 0. In this case, this is the $10,000 negative because this is an investment, right? That's what our CF0. So we put in 10,000, right? But very important here, you have to put this number in as a negative number, and then you hit enter. So that's how you enter the initial cash flow. And then you move on to the next cash flow. That will be your first unique future cash flow. You can do that by pressing the downward arrow key right here, right? And then you see CO1. This is your first unique future cash flow. In this case, we have $5,000 twice, right? So what do? Is you first of all put in 5,000, enter that, and then you press the downward arrow key, right? You have F0, so this is the frequency of the cash flow that you just entered. If you go back here, you can actually press the upward arrow key to go back. This is the $5,000 that you just entered, right? CO1 is the cash flow. If you press downward arrow key, that's the frequency of the cash flow you're entering. Again, like I said, because you have this $5,000 twice, right? So what do? Is you can actually set this to be 2 to capture this 2 cash flows, provided those 2 cash flows are happening consecutively and they're in the same amount. And then what do? Is you press the downward arrow key. Now you're ready to enter the second unique future cash flow. In this case, that would be the $7,000 here, right? 7,000, enter that, right? CO2, then you press downward key. This is basically your FO2. That's the frequency of the second unique future cash flow that you have here. The default value is always 1, so you don't have to change that, right? So you just, you don't have to do anything here, all right? And then now you're ready to calculate the NPV. What do? Is you press, as you can see here, there's the NPV button, right? And on the screen, you should see I equal to 0. This is the calculator telling us, not too fast. You still have to tell me what the discount rate is, all right? So in this case, we have a discount rate of 5%. You do 5, enter, right? Just like the I/Y. Here, you're entering the discount rate for I, right? So any number that you're putting in as I, right, you don't need the percentage sign, so 5 for 5%. You enter that, and then what do? After that, you press the downward arrow key. Now on the screen, you should see NPV equal to 0. Now, that's because we haven't done our calculation yet. So what do here is you hit the CPT button, and this is basically, how do you calculate the NPV with this cash flow and also a discount rate of 5%. So hopefully this is clear to everyone, right? How do you use the cash flow worksheet to calculate the NPV? And the other thing that I want to share with you, right, is you can also use the NPV function to calculate the present value of a stream of future cash flow, right? So here, what I simply did is that this is a previous example that we're going over, but let's say we just want to calculate the present value of all the future cash flows. You can actually use the NPV function to do that, right? All you really have to do is simply to ignore the initial cash flow, right? You don't enter anything for CF0. Remember, NPV, it's simply the present value minus the cost of investment. So if you don't enter the cost of investment, it's simply going to calculate the present value of all the future cash flows for you here, right? So like I said, what do you do here, right? Again, just, because assuming that we want to calculate the present value of this stream of cash flow. Again, you have $5,000 at time 1, $5,000 at time 2, then $7,000 at time 3, right? What do? Again, you clear the memory, you go to the cash flow worksheet, right? You go down, you basically skip entering the CF0 because we don't want to enter the initial cash flow. We just want to go directly to the future cash flows. And then you enter $5,000, right? That's going twice. You enter $7,000. That's once, right? And then you basically do the same thing, NPV, discount rate, and then you can go ahead and calculate. So in this case, you will be able to calculate the present value of those future cash flows. And notice here, if you actually take this, right? This is because this is the present value. If you take that and a minus the $10,000, you actually get the NPV. But because we didn't enter the $10,000, initial cash flow, this is basically the present value of this stream of cash flow. Again, let me just show you basically how to do this, right? So what do here is we want to do second, reset, and enter. right? We're just calculating the present value of this future cash flow, but we're still using the NPV function. So what we do is we simply ignore the initial future initial cash flow. We don't enter the $10,000. All right. So like I said, we want to go to the CF, right? This is going to allow us to go into the cash flow worksheet, right? Don't enter anything here, right? Because we want the present value, not the NPV, right? We want just the present value. So don't enter anything here. Just press downward arrow key, go directly to the future cash flows. All right. So here we got $5,000. Enter that, go down, we have the frequency 2, enter that, down, we have 7,000, enter that, and again, the frequency, we don't have to change that. And then now we're ready to calculate the present value of this stream of cash flow. What we're going to do is we're going to do NPV, right? We have to enter 5 for that, and then downward, and then calculate. As you can see, this is giving you the present value of this stream of cash flow. So this is basically a trick that you can use, although you're using the NPV function, but you're really calculating the present value of a stream of cash flow. It's a very helpful trick that you can use if you have uneven cash flow like this one. So you just enter the future cash flow one by one, cash flow frequency, and you can calculate the present value this way. So in general, what we did in this video tutorial is that we talked about how do you calculate the NPV using the cash flow worksheet. So hopefully that's now clear to everyone. As always, if you have any question regarding the materials that we covered here, please feel free to contact me. Let me know any questions that you have. I'll be more than happy to answer your questions. As always, thanks for watching, and I will see you in another video tutorial.